You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again to commence our options drilling. Yes, it is time for Options Bootcamp, the premier program for options education. My name is Mark Longo, coming at you on a different day. If you're listening after the fact, like many of you are, then you won't even notice a difference. But for all of you in the secret club, we just enjoyed an awesome pro Q&A with Virginia McGlathy there. That was an awesome one. We don't get the chance to sink our teeth deep into all the craziness of ags and everything else going on in those markets. So that was really educational. I know a lot of you had fun with that one. If you don't know what the heck I'm talking about, you want to learn more, you want to check out, of course, our pro Q&As, which go on Tuesday, which is the day we're actually recording this, as opposed to Education Wednesday. Little spoiler behind the scenes glimpse there into our production schedule. Also, Options Oddities, breaking down the whole week worth of unusual activity, really, as well as all the live shows throughout the week and everything else, including you could get your ticket in the hat to win this coming month's November's Pro Trading Crate here. We just have our buddy Nichols in the chat there today. He won the October crate. It's looking awesome. We're already starting to stack it up with cool stuff. So hit up our producer here with your shirt size and your educational tome of choice. Maybe you'll even choose one of Dan's books, in which case we'll have to source one of those for you. But good stuff here. And all the other stuff we're going to put in is going to be awesome, bespoke, and cool. Theoptionsinsider.com/pro is the place to go. Only one of those a month. So you got to get in the hat to win them because they are pretty cool. But and a little extra bonus we throw in there for all of our pro friends. And speaking of our friends, I don't know if he qualifies, but we'll bring him on anyway. He is the black-hatted one himself, Mr. Dan Passarelli, from what the cool kids call to a.k.a. MTM, Market Taker Mentoring. Mr. P, welcome back to the show, sir.
Hey, it is great to be here, Mark. Let's do this darn thing.
Let's kick it off the way we like to these days. Your newest wrinkle over there at MTM, I think what the cool kids are calling, what's your rating, sir? We need some music for that. What's your rating? Something cool like that?
Oh, there's lots of stuff happening here, man. We were looking, this morning I closed Fuel Cell, FCEL, for a profit, which was nice. Just put it on yesterday. Somebody was asking me in a webinar I just did how long we hold these. Every once in a while they're day trades, but they typically go from a day to a week. So Fuel Cell was a nice little play. And just had somebody else in our chat room. Who was that again here? Short squeezes, who took off Fubo for 50% profit, which is pretty modest for this kind of thing.
Oh, modest. So you turn your nose up at 50% profit? Pshaw. 50% profits. I barely get out of bed for 50% profits.
That's right.
Says Dan P over there. Speaking of what people are saying in our live chat, they're all going on about Tesla right now. They're talking about the big run from 850 to 1200. Nichols, our winner of our pro trading crate last month, said that maybe would have been a good candidate for rating. Did you do any rating on Tesla, sir, with this big move?
We did not. I would not. That one is not in our short.
I was going to say, does that qualify with all your criteria for rating? So I don't think it does.
No, not really.
A little bit too much market cap on that one.
Yeah, just a wee bit.
All right, let's keep on rolling. Let's get into the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. You guys ask us questions. Sometimes we turn the spotlight back on you as well with some questions we asked you. Last week, we asked you about volatility. Skew, do you feel that's a good leading indicator for price action? Let me just pay off the results of that one right now. Well, most of you saying no. 57.1% of you saying no. 42.9% saying yes. So that surprised me. I thought there'd be a little bit more insight or interest in Skew. Also, we gave you a third option, and no one took it. 0%. Usually someone chooses that at least, but no one wanted that. So straight yes or no, very binary on the Skew. We also asked you last week some immediate blush of the listing of the, announcing, they're going to be listed next year, of the new Nanos by Cboe, the AKA 1-to-1 options, one option, one share. We asked you guys excited about these? You're going to trade them when they list? Almost 2/3, 64.3% saying no. Yes, 35.7%. Dan, are you surprised that our audience, A, not loving Skew, and B, decidedly bearish on the prospects for Nanos, sir?
No, I'm not. I'm not surprised about the Skew thing because that's one of my students. My flock. We look at that as maybe opportunity as opposed to a leading indicator. So yeah, I'm not surprised by that. That's very, very conducive with what we do and what we teach and how we function. But yeah, the Nanos, you know what? I think we've got to see when they roll out. I think that there is definitely a market there, which may or may not be the folks who have been longtime listeners for us. So it'll be interesting. It'll be interesting to see how it plays out. I do kind of think that it's going to work.
There's certainly an audience for it, just for the size alone. I mean, you're eliminating obviously one of the big benefits of options, which is leverage. But outside of that, there is a lot of value, at least from a size perspective. And people are trading fractional equity shares. You can't tell me those people wouldn't be interested in a 1-to-1 option. So I can certainly see why Cboe is going down this path. I can also see why our audience a little bit skeptical. They've been burned before. They say, maybe we'll wait and see how these things play out, how the spreads play out, how the commissions play out before they consider diving in. So I could see it from both ends of the spectrum there. This week, Dan, we thought in honor of Halloween, let's get spooky. We said, what do you feel is the most terrifying option strategy? What's the one that when you hear it, when you see it, it kind of chills you to the bone? And if you don't see the one that chills you, send in your alternatives. We gave you 4 kind of hair-raising suggestions. So straddles, Iron Condor. I think the name alone is intimidating to a lot of people on that one. Time spreads, our old friend, or just kind of a left field fun one, conversions or reversals. Mr. Dan, if you have a choice of those, have at it. And then B, more importantly, what do you think our audience is voting for?
Oh man, I got to admit that I kind of cheated a little bit here. I'm looking at what the audience said. You guys are saying time spreads. Come on, man. Time spreads are incredible, like edge getting trades. Oh man. Those you should not be afraid of. But to be fair, there is a lot to them. You kind of have to learn some nuances. But once you do, holy cow, they're so powerful.
Yeah, I could see why people are a little bit intimidated by these. I knew once you put time spreads in, it was probably going to run away with it. And that seems to be the case. 40.6% coming into Showtime saying time spreads. Iron Condors, 31.3%. I think the name, again, just kind of makes it, the actual thing itself, not that scary. Straddles, 18.8%. And conversion reversals, 9.4%. Those, I think, are just confusing to a lot of people. Get out there at options. Make your voice heard like a lot of you already have. This will run through the end of the week, listeners. But Dan, before we get into some of our other questions this week, you always have people hitting you up at MTM with interesting, sometimes perplexing questions. What's a cool one that's come across your radar this week, sir?
Oh, man. Yeah, I am always getting questions. Well, I did have one person who traded Tesla by selling call credit spreads. And was really sweating it out yesterday, at the close. It was like, oh man, like what can I do? Can I maybe do a put credit spread or something? And I was like, yeah, dude, that's like taking a Band-Aid and throwing it into the ocean. Like it's to mix a metaphor or two there.
Take a Band-Aid and throwing it into the ocean. Not accomplishing much with that one, sir.
No. So, like sometimes you just get into these situations where it's like, man, what else can you do? Because there was there were like thousands and thousands of put credit spreads that traded in that on Friday. And I think it might have had a little bit to do with the news that the Biden administration was talking about credits for electric vehicles, maybe. But, as far as that person went, the downdraft today in Tesla kind of helped him out a little bit. But so I guess the moral to this story is sometimes you just end up in a situation where, like, man, there's just nothing you can do,
That happens. Like when you throw a Band-Aid into the water, there's nothing you could do about it. It's just not going to do anything except cause garbage in the water. The audience is agreeing here. I was like, we have Unlimited in the chat saying he had a butterfly in Tesla that got blown out. Yeah, that can happen. That's the challenge with butterflies. You could be right and yet wrong at the same time. It just blows through all your strikes. It's a challenging one. I don't know how long your time frame was for flies, but you have a couple of moving parts with flies, right? Obviously, you have the short strike you want to get right there. Then also you have to have the timing right. If you're too early or obviously too late, then it's not going to work out either. So yeah, there's a lot of moving pieces to flies, which make them interesting and challenging for a lot of people. Let's keep on rolling here. Miltz wants to know, says, you guys have said that the current volatility skew for calls is not normal, that we shouldn't expect this over the long term. What would you say is normal? We were referring back to our episode a few weeks ago called This Is Not Normal. If you missed that one, listeners, check it out. It's kind of, I think, required listening for this modern era we all find ourselves in terms of what your frame of reference maybe really should be on some of these things out here, like volatility, like skew, and everything else. And, it's a good question, Miltz. Luckily for you, we like you guys on this show and on the network. We take care of you folks. In fact, we give you guys a lot of awesome stuff. Not only pretty much the lion's share of our content for free, and also we haven't mentioned them today, but we do those earnings move results, and earnings season reports. We crunch all that great earnings data, courtesy of our friends over there at ORATS for you, all completely for free at our website. And I don't mention it enough on this show, but you guys should really be checking, even if you don't listen to our TWIFO show, This Week in Futures Options, guess what? You can still go use the reports completely for free. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO, This Week in Options, This Week in Futures Options. Both of those URLs should work. They will get you to our This Week in Futures Options reports created specifically for that show. Why do I direct that to you? Well, maybe you're interested in commodities or futures, first off, but also it'll show you in very specific terms what's going on with the skew in some of your major equity indices. Like I pulled up the S&P here right before the show, the E-mini S&P 500. A lot of you have traded it. Keep an eye on it out there. Take a look at the broad indexes if you want some semblance of what skew should, quote unquote, be. And I use should in air quotes because nothing is normal right now. An index skew is not normal either. The puts were very rich for a while there, more than they usually are. But traditionally, what we typically see in most equity indices is the calls trade at a discount from an implied volatility perspective, and the puts trade at a premium from applied volatility perspective to the at the money vol level. And you can see this very clearly right now. Like I pulled up the E-mini S&P 500 right before showtime. Let's go out because a lot of the action happens in the weeklies. Let's go out a few weeks. So we're going out to the contract expiring in 3 weeks there in November there. And we're looking at the skew right now. And again, the nice thing about these TWIFO reports, they break down the put wing and the call wing independently. If you look at just the Cboe skew index, doesn't do that. It just gives you one number. Most skew measures are just one number. It's completely useless and counterintuitive. This gives you both, which is why I recommend everyone check these out. I'm looking at the 3-week skew right now for the S&P 500. A week ago, the puts were, by the way, the at the money vol, about 11.5. So kind of light out there right now. The puts were 19.9% bid above that last week. This week, again, this report is called This Week In, so it shows you the evolution from one week to another. This week, The puts getting juicy, 27.8% bid. That's where we've seen the puts been hanging out a lot lately, is almost 30% premium to the at-the-money. That's a hefty put bid. I would not call that normal either. But still, that's along the direction of what you could expect. The calls last week were 13.8% cheap. This week, 17.2% cheap. That's an aggressive level on the calls as well. So I would not say that's normal either. Nothing right now is very normal, unfortunately. But in general, that should give you an idea, an indication of where Skew should be hanging out. I would say most times you're going to see a bid around the 14 to 15% level for the puts. And let's say a discount of around maybe 10 or so percent to the calls, something along those lines. Maybe a little more, maybe a little less, depending on the setup and everything else along those lines. Excuse me. Oh, my throat's killing me here. Dan, have at it while I go drown my sorrows here.
Yeah, you know what? Skew's like a very, very important thing to look at. The thing with Skew is, well, first of all, it's really difficult for retail traders to use it to analyze it. It's nice to be able to use the Cboe Skew index, but that's it's something that you would have to sort of look at every day and really familiarize yourself with what it should be. And it's only on the broad market. I think we talked about this a little bit on the last show, if I'm not mistaken. So to use it on single names, like you're looking at Apple or Amazon or whatever it is you're looking at, Rocket, and to say, well, how has the Skew changed? Man, you've really got to have some sort of system of following that. And if you do create a system and follow it, like basically record it every day, you can get some pretty useful information out of there. For me, like I kind of referenced earlier, it's less predictive. It's less like, oh, the put side is really bid. That means the market's going to go down. I look at it more like, oh, the put side's really bid. That means they're really expensive options. I actually kind of want to sell probably puts or put spreads, sell some downside and take advantage of the opportunity to sell really expensive options.
So yeah, use those reports, listeners. Again, they're free. CMEgroup.com/TWIFO or /TWIO. Both of those would work. They'll give you a little bit more of a frame of reference, not just in equities, but all the different products that trade over there. So you're talking ags, metals, energy, whatever the heck floats your boat. You can see what the skews are in those products as well and give you maybe a better sense of what quote unquote normal could be if we were in a normal environment. Unfortunately, nat gas, you name it, none of them are really normal right now, but at some point we would. But in general, you're going to see a discount in the implied vol to the call wing and a premium to the put wing. How much, what degree that is, that's going to depend on a lot of other moving factors that we don't have time to get into right now. Next up, Diggs. Diggs wants to know, have either of you slung any BITO yet? BITO, of course, the ProShares ETF on Bitcoin. Yes, I have. We were talking about covered calls on a recent episode and all the premium to the upside going on. So I thought I would dip my toes in out there. I slung an upside fly just to kind of get a sense for what's going on out there, really to have a feel for it and kind of get something to talk about on these shows, quite frankly. So what did I put on? I pulled it up just now. I put on the 41, 43, 47.5 vertical expiring this Friday. I did it last week out there in BITOs. I had about a weekly kind of roll of the dice to the upside there. BITO's hovering right around 41 right now, so I'm looking all right. I'm pretty much about unched, nothing crazy. I don't normally structure these flies that wide on the second leg, but it was kind of just the nature of the beast and the upside there in BITO. But the upside is call heavy and premium heavy, so it is attractive for covered calls and other types of strategies that allow you to sell some upside out there, including a fly if you structure it correctly. So I'm looking pretty much unched up slightly, I think, on this thing right now, but it'll be interesting to see if, BITO pops. This thing could have a little bit of juice to it. And again, it cost me almost nothing to get into this thing, so that's also attractive out there. Mr. Dan, we've had a few weeks under our belt now of trading. Have your thoughts evolved at all on BITO? A, and B, have you slung any, sir?
I have not slung any. I like your trade. I love those really limited risk, high reward type trades. That's really cool. But I have not actually slung any. We were talking, I think it was the last show we were talking about how I need to jump back into crypto because I used to do it fairly heavily a couple of years ago, I guess it was. And I did get into a few individual.
Dan was buying Bitcoin when it was $1.
Oh, God.
He's dialing in from his own private island right now.
it was one of those situations where there was a guy who's like, yeah, there's this, cryptocurrency. I'm like, what? Bitcoin? What are you talking about? And I was like, wait, so it costs $300 to buy one of these coins?
Yeah, it seemed ridiculous, right?
So
get the hell out of here with your $300.
Yeah, I cannot even pretend to be a pioneer in crypto, but I'm back in though.
He's back in. Dan's back in. A little Shiba Inu for you, sir?
Yeah, that is the one.
Shiba Inu. There we go.
No.
Gonna drive our audience crazy with that one. They love it or they hate it. The old Shiba Inu. Up in the top 10 now in our crypto rundowns, in top 10 in market cap. How crazy is that? Let's go here to here's your buddy, Steven. He's back again, Stephen Womack. He sent a link to the press release from Cboe about the Nanos. He says, hey, Mark and Dan, I'd love to hear your take on this, as you guys have discussed mini options before. Well, you're in luck, Stephen. We talked about that extensively on the episode that we recorded last week. So the second part, we did 2 last week. So the folks in our secret club, they got to listen to it live. They heard it already. For everybody else, you're going to get it tomorrow on the network feed on demand. So you'll hear Dan and I weigh in at length on the Nanos and all the fun and goodness therein. And everyone listening to this live now today in the secret club, you get to hear it a week early. This is going to be going up next week. Don't blame me. Blame the black-headed one. He's traveling hither and yon. Dan, we touched on Nanos earlier. Have your thoughts evolved on these at all?
No, I think it was last time we talked about this. I said when they did the minis, I was just like, I think it was maybe some planning that didn't go as planned or something, or maybe there just wasn't a plan. But I just have a lot of faith that the exchange sort of learned from their mistakes and thought this through, looked at all the fractional shares and stuff that trade, and we're just like, we make them available. We start on our proprietary products, market it, and get some decent liquidity providers taking the reins on this. And I think there's a great chance that it'll work out. I really do.
Well, you're more optimistic than our audience right now, sir. Like I said, they were almost two-thirds against right now. But yeah, there you go, Greg. What was the name? Steven, we'll do a deep dive into that. We've already done it. For you, it's upcoming in the future. So stay tuned for that. All right, let's go to this one. It's kind of a weird off-topic one from Berlanti. He admits it. He says, loving the pro. Thanks for launching this. Well, you're welcome. Berlanti, got to see you there in the live chat more and also in our pro Q&As. So glad you're enjoying it, though. He says, somewhat off-topic question, but it's been bugging me lately. Sports betting is becoming all the rage, and we're seeing exchanges and brokers trying to get into that space as well. How long do you think it will be until we can write a covered call on the Bears, for example? But my real question is, given all this becomes legal, do you think traditional option strategies will apply in this completely new and uncorrelated marketplace? Or will we need to develop an entirely new arsenal to be a sports options trader? Crazy, I know, but these are the thoughts that swirl in my head. Well, you never need to apologize in the secret club there, Berlanti. Whatever crazy thoughts come to your head. That's what we're here for, to discuss on the show. Maybe not all of them, the appropriate ones for the show. But, he raises a good question here, actually, Dan. A couple of things. You're right. First off, the exchanges are champing at the bit to get at this marketplace. They see the DraftKings and the FanDuels of the world running away with that. You don't think NASDAQ and CME, everyone else want a piece of that action? They do. So they're trying to figure out ways. The problem is, like crypto, it's the regulatory side. These underlyings, quote unquote. Let's take your example, the beers. What kind of underlying is the beers, right? There's so many moving parts there. There's so many ways to, if you had, let's say, a contract on that, let's say performance winning, something basic like that. There's so many ways to game that on the inside, right? You're a trainer. And maybe you mess someone up or you don't fix them correctly, and now they lose the game, and all your puts explode in the money, something like that. So there's a lot of issues. I know this has derailed the attempts to make Hollywood movie exchanges in the past. They've tried to do this, and regulators have pretty much said, you know what, this space is just rife with opportunities for insider trading. We're not going to approve it, and it kind of fell apart. That's definitely a hindrance in the sports side, but also I think theoretically, Dan, the question is interesting. what do you think? What do you think the skew would be on something like the Bears? I guess it depends. If they're going into a game where they're heavily favorited, I guess the upside would be bid, right? And vice versa if they're going up against, like, let's say the Bucks from last week.
Yeah, I mean, I don't know. I mean, first of all, I would have a hard time seeing the SEC approving that. I'm not saying if it did happen that that I'd be dreadfully surprised. I think they won't, but I mean, hey man, we've seen a lot of crazy things happen. I mean, Shiba, yeah. So I would bet against the SEC approving that, because I think that things have to have some sort of economic purpose. And one could argue that, does Bitcoin really have an economic purpose at this point? Somewhat. But the score of the Bears game, I don't know about that. And the other part of that you referenced, Mark, was that it might be too easy to manipulate. And the SEC does really care very strongly about that, which, little known fact, is why the underlying for the VIX is what it is. The expected future value of a 30-day SPX option, because the exchange, the Cboe, just figured that there was no way that it was going to be approved if the underlying was just the spot value, because it's too easy manipulated. So yeah, I think that would end up being the deal breaker, is the potential for manipulation. And I would hope that it would be a deal breaker, because there's no economic purpose for hedging that.
I know the stock prices of DraftKings and others would disagree with you on the economic purpose. There's value to be mined somewhere there, but you're right. Yes, the actual underlying itself is highly dubious, but also highly fascinating. It's an interesting question, Berlanti. I need to mull over that some more. What would the skew? How would your traditional option strategies? I would think a covered call on a game like that, where you have a future that the Bears are expected to win. Whatever the denomination of the underlying is, you can sell a covered call against that future and probably get a pretty hefty premium. So there's a lot of intriguing things to mull over with that. Unfortunately, yeah, we're a long way away from. I do think, though, if they could figure out a way to do this would open, as popular as options are now and have become in the last 18 months. Man, imagine if we added quote-unquote underlyings that people actually understand. Things like the Bears, or let's say, God forbid, the Packers. I noticed we got a Packers owner in our chat. I won't hold that against you for owning shares of the Packers. But yeah, they are a listed quote-unquote team. You can't really do anything with the shares, I don't think, but they do exist. So there are intriguing options out there, pun intended. It's just not something we're going to see anytime soon. But they're all trying. I know NASDAQ and others are trying to find ways to break into that marketplace, because it's enormous. Like the sports betting market, if they could crack that nut, it's almost going to dwarf so many of the other things we're talking about here on this show. So the potential there, the people are going to keep trying to tilt to that windmill. I don't see it happening anytime soon, Berlanti, but it's an awesome question and an awesome thought experiment. How would that look? How would that perform? If you could put aside the rampant manipulation that will certainly happen, you put that aside and just think about it from a theoretical perspective. What are your thoughts, listeners? How would that look? How would that perform? Does that intrigue you? Is that something you'd want to maybe trade in the future? Hit us up. Let us know. Maybe that's a good question of the week. I don't know, Berlanti. You're giving us some food for thought here. Unfortunately, that music means we come to the end of today's episode. But before we go, Mr. P, if folks want to hit you up, maybe they want to talk about sports wagering, maybe they want to talk about rating, where should they go? What should they do?
Make your way over to markettaker.com, 2 T's in a row, and, just hit the contact us, say hi. We'd love to hear from you.
MTM, Market Taker Mentoring. Don't forget the second T there, markettaker.com is the place to go to learn more. We got to go on out of here, so you'll get an on-demand episode tomorrow, live to tape there for last week's second episode, and then next week you'll get this episode. So look forward to that. Of course, the rest of this week, for those of you listening live, we got great stuff coming up tomorrow. You have Brian hitting you up with OPR tomorrow. So we're still keeping the Education Wednesday flair alive Thursday, of course, double dose of TWIFO, where we get the reports from, as well as episode 2 of the Option Block Friday Ball Views. And, of course, for those of you in the Secret Club, you get Options Oddities. Then back again next week, all the way through to another Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.